As crazy as it sounds, the phrase Bitcoin is dead has risen to the top of Google's search results within the last month. Memes have been created all over the place, and funnily enough, there are even obituary stats holding all of its deaths running to a whopping 461 times. However, the question remains, what is really going on in the crypto and Bitcoin world, and why are there predictions of it going to zero? In today's video, we will be considering the likelihood of Bitcoin actually going to zero in the near future. So, while you sit back and relax as we get into this video, remember that while everything mentioned is only a prediction, it could very well happen. That said, let's get into the video. Now, here is the first thing we have got to agree on for a second. Bitcoin is probably going to zero. But that isn't all due to the backstory many people today have chosen to ignore. That backstory is the simple fact that the biggest threat to cryptocurrencies, and Bitcoin in particular, is stablecoins. First, a stablecoin is a coin where one coin equals $1. Looking at these coins, people are so quick to see them as boring because their value doesn't drastically yo-yo up and down like Bitcoin, for example. There's just no fun in that to some people. Regardless of their dull status, we have the big companies, corporations, and even governments looking into these stablecoins. As much as that doesn't make much sense to us, all of this is mainly dependent on data which, for some reason, has become the new digital oil. So, countries like China have already started taking the necessary steps to protect themselves. As of April last year, the country tried out its very first national digital currency. While this may look a tad bit forward, central banks representing 1/5 of the world's population have said there is a high chance of also releasing a digital currency soon. Hence, these central bank digital currencies, or CBDCs, have proven to be one of the greatest threats to Bitcoins. Now, when looking back at the ban China put on Bitcoins, you can easily attribute it to the country's need to control, or simply for censorship's sake. However, if you take a deep dive into reasoning, you will come to realize and understand what the motives are. Looking at how these CBDCs work, the central bank can simply hand over a coin as a token and easily track its movements throughout the country's financial system, making it very easy to get full financial transparency and market data showing how the economy is working. Most of this valuable financial data is dispersed among several private banks, coins, physical cash, hedge funds, and financial institutions, making it quite hard to get complete market data about that country. However, in contrast, tracking all this is easier once you can issue a number of digital coins. This is unlike the usual blockchain and Bitcoin, which is decentralized and anonymous. There is no data, as Bitcoin completely wipes out every form of financial data companies and governments want to get hold of. And this has already proven to be the upper hand CBDCs have over cryptocurrencies and Bitcoin. However, this isn't all there is to know about the case of Bitcoin going down to zero, as a couple more issues have posed as threats. Most significantly is the fact that many people have refused to accept the fact that just like many other companies that failed in times past, Bitcoin also stands the chance of the same predicament. So if you believe Bitcoin is too big to fail, I'll advise you to rid yourself of that mentality because it could burn you. Sooner or later, the CBDC will take over as it may have the potential that favors the government. Then there is the hot issue of energy consumption. Considering that, it is clear that to secure the Bitcoin network, there must be miners who use up an insane amount of energy. Research shows that these miners use about the same amount of energy as Argentina in 1 year. Can you even comprehend that much energy? Considering the recent price drop, the amount of energy and number of miners mining Bitcoin dropped off as well, leaving these miners with little to earn. So let's make sense of it, shall we? Well, it's simple. The energy needed to secure a massive amount of Bitcoin and a growing Bitcoin infrastructure will only keep rising and rising. So, considering what has been established, the people controlling the Bitcoin aren't open to changing their consensus mechanism, nor are they considering changing from proof of work to proof of stake or any other alternative technology. While on the other hand, the government is on the rise to reduce the amount of energy consumption. Following all this is the issue of the increasing cost of energy. And even though many people think that Bitcoin is mined with renewable energy, it still costs money. Hence, if the mining of Bitcoin stops being cost-effective, there will be a progressive drop in the number of miners. Some might believe that when these miners drop, the difficulty will be changed for those still mining to earn rewards. However, that isn't necessarily the case, as there is the issue of this happening quickly, because at that moment, Bitcoin recalculates the mining difficulty every other week. In the space of these 2 weeks, it is very likely that a run on Bitcoin could lead to people completely losing trust. This then leads to an active drop of miners, leaving Bitcoin with no one to secure the Bitcoin network. However, certain people tend to argue that there will still be many miners. But what will be the answer or solution if the number of miners drops drastically, leaving Bitcoin vulnerable to a 51% attack, leading to more distrust and the numbers plunging even lower? As these numbers drop, the prices will also continue to go down. Then there is the issue of regulation. Now, while this may be a risk to cryptocurrency in general, depending on the regulations, it is likely to be a significant risk for Bitcoin. But of course, it also depends on how the miners react to the regulations put in place. Suppose they choose to be rigid and everyone else says otherwise. In that case, people will tend to move away to coins being regulated correctly, such as some of these stablecoins, to invest in them. So, while these regulations may not be an issue with cryptocurrency in general, when it comes to cryptocurrencies that refuse to adhere, all you tend to see at the end is Bitcoin going straight to zero. Keep yourself educated on cryptocurrency and the market by watching the video on the screen next. See you in the next one.